Good morning, Keith at Crypto Bullseye, and this one's going to be an update on Cardano. This is for the ADA Army. It's 56 cents at the moment. We've been absolutely battered on Cardano. Net worth growth's happening. Things are happening on the network. Everybody's adopting Cardano. Price is going down. What does that mean? It's undervalued. So we're at a strong support base that we need to talk about. But when we just zoom out, guys, we look at the crypto fear and greed index. We look at that. Hope, belief, optimism, thrill, euphoria, complacency, anxiety. We replicate that. Disbelief, hope, optimism, belief, thrill, euphoria, complacency, anxiety. Exactly the same as the Cardano chart, guys. These things work because it's a representation of human emotions at any given time. And unfortunately, 2025 is supposed to be the on-risk rally. It's supposed to be the alt season rally, guys. Alt season hasn't been cancelled. Alt season is late. I'm calling it the late rally. And so far, we've been in the pullback on Cardano for 214 days, guys. That's the whole of this year that we've been in the pullback. That's the whole of this year that the bears have regained control. So what we're going to be talking about in this video, guys, is volume. We're at two big volume spikes that are going to act as support. We've already acted as support here once, twice, three times. We've got triple bottom there. We've created a support base. We're going to add in our support, guys, and I'm going to show you how the support gets less and less and less as we start pushing up to the $1.32. And once we break the $1.32, there is little volume to push us all the way to $2. So this one's going to be about volume. This one's going to be for the ADA Army. Let's dive in. And we talk about gaps. So we're going to talk about volume, we're going to talk about gaps, and we're going to talk about support, and we're going to talk about resistance, guys, because that's what type of a trader I am, support and resistance. That's the main thing for me, is the structure. How can you tell where there's structure? It's the most sticking points, guys. When there's most sticking points, that helps you analyze and understand exactly where you can get a reaction going forward, because it's happened so many times in the past. That's why we expected the 38.2% retracement. That was a rejection there. That was a rejection there. Why was it a rejection there? Because it was a rejection there, because it's the 38.2% retracement. Guess what, guys? Put it back here. What happens? You've got support, resistance, support, support. So these things work, guys. These are the levels that people are looking at, and these are where all the eyes are on the chart. And when you've got all the eyes on the chart looking at the same levels, what does that create? A consistency of either buy levels or sell levels. What does that create? A buy wall or a sell wall. That's why structure, guys, structure, what's happened before in the past, where the biggest build-up of price action was, how many times that it got kissed previously before and got a reaction from that level, is going to give us the biggest indication what levels we need to break to overcome. And once we break and overcome that, what levels that we need to overcome going forward. Because as you break key structure volume, resistance gets less, resistance gets less. So what we're going to use on this, guys, is a fixed range volume profile. And I'm going to show you something new on this. So fixed range volume profile, pull that up on your tabs. And what we're going to do is we're going to go all the way from this bull market high all the way to where price action is, including the bear market low. And we're going to look for the area of biggest traded volume. Now, you'll see here, guys, what do these volume bars represent? The biggest one here with the line, that is the biggest area of traded volume within this range from here all the way down to here, from the bull market high all the way to where price action is now, including the bear market low. So if we just pull a bar out here, guys, and look how price reacts to this level here, you can see, look at how price reacts to this level. If we just zoom in, support, 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 resistance, resistance, resistance. Guys, support, support, resistance, resistance. When it's above its support, when it's below its resistance, and you can see there's a consistency there. That's just this bar here. That's the most area of traded volume. And you can see, haven't come back and kissed this yet. However, we can go to the next one and we could do exactly the same again. This is the second biggest area of most traded volume. What happens to price on this bit, guys? Support, support, support. We've come back down. Support. We've come back down. Resistance, resistance, resistance. This is where we're acting, and this is where we're holding support. 1, 2, 3 kisses. This is the support base, and that's sat at 57 cents. The bottom of that support base is 46 cents, guys. That's your support, and that's your resistance for this volume bar. Pay attention. That volume bar and that volume bar are the biggest two volume bars out of the whole of the range since the bull market high of 2021. Now, what happens, guys? Look, volume starts getting less and volume starts getting less and volume starts getting less. So what does that mean? That means that there's less resistance points. Once we've broke through this range here and taken out the 200 moving average, you've got little resistance here. You've got little resistance here. You've got even smaller resistance here. And then this is what we talk about, the gap. This is where you bring the gap in, guys, because what comes up must come down. And when you haven't got structure, remember, the more sticking points, the more chances it's likely to have a reaction. When you've got no sticking points, you just get a consistent move to the downside here. No build up of price action, no structure support, no structure resistance. You just got to build up, no build up of price action. You've just got to move to the downside. Now, when we break the 38.2% retracement, guys, the next resistance point, as far as Fib's concerned, is the 61.8% retracement. What's that? $1.32, $2. What's $2? It's a key round psychological number. What's $2? It's an area where people would put in, take profits in the short term. So you've got your 61.8% retracement traders that are taking it at $2. You've got the people that are just thinking $2 sounds like a good number. I'm going to take it at $2. So that creates, guys, a consistent wall. You've got your 618, you've got your $2 traders, and then there will be other things in there that we're just not looking at the moment, guys. I'm trying to simplify this. But what I'm trying to say is what goes down fast will come up just as fast. So once we do break the 38.2, guys, and once we do break the $1.32, we've got little volume all the way to the $2. Does that mean it's going to be the bull market high, guys? No, it doesn't. It just means that this is the biggest area of resistance in the short term to overcome. And that's why we're struggling in this range. That's why we're struggling. The key thing is once we get this break here of trend, once we get a break of trend to Cardano, that's showing that the bulls have really got control. And then you'll start seeing the higher highs, you'll start seeing higher lows, you start seeing bigger swings, guys. Right, okay, so this is what we were talking about the volume. So you've come down here. Here's your volume, here's your volume, here's your volume. You can see the size of these bars, you can see the size of these bars, you can see the size of these bars. What happens at this area here, guys? Nobody between this level, had any kind of buy orders. It was pretty much just sell orders controlling all the way there. Now, this volume spike's still there, or lack of volume spike. As soon as we break $1.32, guys, there's going to be no resistance points. There's going to be no sell walls, all the way up to the 0.618 retracement at $2. So the way that I see it working, guys, is once we break through this, and it is a long slog, 7 months in a range is a long time, guys. It is a pullback. We are still maintaining a high low. We've hit our two biggest areas of support. We've hit our two biggest areas of traded volume. Now we're expecting to get a bounce from this. But once you start pulling back from the 61.8% retracement, then as long as you're holding the 38.2 at the least, you can expect to push back up 786 and beyond with little resistance. So Cardano, once it breaks the 61.8% retracement, once it breaks $2, once it holds $2 as support, that is when you're really going to get the altcoin rally on Cardano and start seeing some major swings. So guys, I'm going to be doing the giveaway in the Discord today because we've done a video with Brad from Real Infinite Crypto, and Brad's kindly giving away $200 of a Garpy token. So you've got a couple of hours left, guys. Go back and watch the video on Agape. It was the last video. Go back and watch that, guys. Comment, stick it in the Discord group, and take a screenshot of the comment, and then you'll be added into the draw. There's going to be 8 winners of $25, and we're going to be giving away that live on the Discord group today. While you're at it, guys, go subscribe to Real Infinite Crypto. I'm going to be working more closely with Brad. This guy is an absolute superstar, guys. He made me feel so welcome. And when you've got someone that's got 329,000 subscribers and you've got little old me that's not even hit 10,000 yet, this guy reached out to me and he just welcomed me with open arms. So he's a great guy. Go and follow Real Infinite Crypto, and I'll see you guys in the next one.